Hello, everyone. Good morning and welcome to our webinar. Let's take 2 minutes for people to drop in and then we'll get started. Yes, hi everyone. Welcome to the webinar. This is the first webinar about EU Taxonomy. In this webinar, we will focus on the step-by-step pathway to compliance. I'm Lawrence, Sustainability Solutions Manager at Coolset. Next to me is my colleague, Jasper. Would you like to introduce yourself?
Yeah, thanks, Laurens. So welcome everyone to this webinar. Some of you might have already attended previous webinars, so you already know me. But I'm one of the sustainability researchers here at Coolset. For the past year, I've spent a lot of time researching sustainability frameworks. For a long time, the CSRD, and now since a couple of months, also the EU Taxonomy. And so now I'm going to share the findings that we've gathered at Coolset with you today. I hope you find it useful. More of a public service announcement. Feel free to put your questions in the comments or in the question section. We have a Q&A at the end, and then we'll get to all of your questions. And if we can't answer all of the questions, we'll try to answer to you via email.
Yes, before we kick things off with all of you, let's go through the agenda for the day, plan for the day. First, we're going to talk about the Omnibus, of course. What's EU Taxonomy, eligibility, alignment, the technical screening criteria, the solution from Coolset, and a Q&A at the end. As Jasper said, please use the chat bottom right for any questions, and we will send you the slides after the webinar. So let's start a poll first. So the question is, how far are you in your CSRD journey? Let's give it a few seconds to get all the answers in.
So it looks like a lot of you are still getting the hang of it, but I think we're starting to see a trend where less and less people are just getting started. So we're seeing that CSRD is progressing gradually. Also, the knowledge in the field is progressing gradually. I'd like to maybe hope that some of that knowledge comes from previous webinars, but also for those attending for the first time or that are just getting started, do know that this webinar is intended for all types of knowledge backgrounds. So hopefully you'll be well equipped to deal with EU Taxonomy after this webinar. Then the second question, of course, more specifically to the topic of today, which is, did you already start with the EU Taxonomy? I think here we might see more of you that are at the beginning of it. That's just a hunch, but I think that we're seeing companies still kind of getting started with EU Taxonomy. So indeed, I see that the main answer here with right now 63% is no, still researching. So most of you are still kind of getting the hang of it. And I think that's also the point of today's webinar, is to give you a deep dive into the main steps of EU Taxonomy. So we're not going to go into any major details, but then in the future, we'll host more webinars where we'll maybe dive into more of the nitty-gritty. But today is really a webinar to give everyone a deep and fundamental understanding of the EU Taxonomy to help you make the first steps towards assessment in the future.
Yeah, so first, ESRS to EU Taxonomy. A bit about the terminology. So from CSRD, ESRS to EU Taxonomy, the CSRD dictates who and when to report. Then the ESRS dictates what must be reported. The ESRS has over 1,100 data points on which companies must report. And these data, as you know, are Yeah, they consist of data points broken down into the ESG pillars, environmental, social, and governance pillars. And the EU Taxonomy is part of the ESRS E11, and that's what we're going to talk about today. So without further ado, on to you, Jasper.
Laurens. So I think those attending today that have a bit more understanding of the CSRD and the EU Taxonomy landscape have probably heard about the Omnibus regulation. I think it's good to reflect on this for a moment. For those that don't know yet, the Omnibus regulation is basically the European Union's plan to streamline the CSRD and EU Taxonomy and CSRD reporting with a plan that's going to be published on the 26th of February. Let me just share this screen here so you have a bit more to look at. Yeah, I think it's we don't know yet exactly what's going to happen, but it's always good to keep an eye out on this. At Coolset, we're always keeping up to date, and also our platform is made for it's made for agility. So as soon as we know what the updates are, we'll be sure to update them in our platform, including, of course, our EU Taxonomy module. So as I mentioned, the EU Omnibus streamlines the CSRD, the CSRD, and the EU Taxonomy under the EU Competitiveness Plan. And what they've already mentioned is that they want to reduce administrative burdens by 25% for large firms, 35% for SMEs. For large firms, this would mean that around 275 plus data points are removed, assuming that we have the 1100 data points as a starting point. So that's quite significant. No one really knows yet what the final outcome will be, but there are a lot of people talking about what might happen. But anyways, they're also saying that they're going to introduce a small mid-cap category, which is also uncertain which category that will be exactly and who will fall under that. But follow us on Coolset, and we'll keep writing more about that on LinkedIn and on our website. As I mentioned, the full proposal is expected on the 26th of February. And our next webinar is actually being hosted on the EU Omnibus. So we're going to host that in the beginning of March, which will be after the EU Omnibus regulation is published, so that we'll have some time to get together all of the necessary reading, but also prepare a webinar that contains all the details of what the EU Omnibus entails, so that you don't have to do all the reading. Just keep our LinkedIn, keep it in the background, keep it running. And you'll see our webinar announcement, I believe, next Monday. So now let's dive into the topic of today, EU Taxonomy. So I think, as most of you are also just beginning with your EU Taxonomy journey, it's good to really start with an understanding of what does it actually entail. And I'd like to start with a small definition provided by the European Commission. The EU Taxonomy is a classification system that defines criteria for economic activities that are aligned with a net zero trajectory by 2050 and the broader environmental goals other than climate. So what you see here is that the European Union wants to be the first continent to be climate neutral, or to be net zero rather, by 2050, and the EU Taxonomy is supposed to help in that by redirecting financial streams towards sustainable investments. In that sense, it helps investors, companies, and policymakers identify activities that align with climate and environmental goals. And it supports the EU Green Deal by directing capital towards sustainable investments, as I mentioned. Now, here we get more practical. So it does this by splitting up into six environmental objectives that contain economic activities. So throughout this webinar, I'll be breaking down those into a lot more detail and going over the terms that you need to know, but also how you need to operationalize the EU Taxonomy in order to make it workable. So what are economic activities? So these are at the core of the EU Taxonomy, and they're called economic activities. And an activity must follow these 2 points for alignment. So it must contribute to at least one of the 6 environmental objectives listed in the taxonomy, and it must do no significant harm to any of the other objectives while respecting basic human rights and labor standards, which are the minimum safeguards. So what you see in these 2 points are actually 3 main thresholds that economic activity has to pass in order to be considered sustainable, or rather aligned, as they call it in the official terminology. So that means it needs to substantially contribute to one of the 6 environmental objectives. It needs to do no significant harm, and it needs to follow the minimum safeguards, which are basically respecting basic human rights and labor standards. So I'll go over those in more detail in a bit. But what's also good to know is that there are over 100 economic activities that companies can contribute to. And these economic activities are essentially the framework on which the EU taxonomy rests. So you as a company are going to go through these 100 plus economic activities. And I'll also provide some examples in this webinar to help you kind of conceptualize that and make sense of what these actually are. So here we have an example. So one of the economic activities that's provided is called electricity generation using solar voltaic technology, and it's part of the environmental objective climate change mitigation. And it has a very simple description. Believe me that some of the other descriptions are a lot more complicated and more dense in information. But the description here essentially is the development and operation of facilities that generate electricity from solar PV technology, classified under NAICS codes D35.11 and F42.22. So let me break this down here. So essentially what you're looking at is a description that is very simple. So if you have solar PV panels, if you have solar panels on your roof, or you're working within that industry, then you are eligible for this activity of electricity generation using solar voltaic technology. And what the NAICS codes here mean is basically the NAICS codes are a classification system used by the European Union to help companies assess in which sector or activity they're working. So these specific NAICS codes are directed at solar PV technologies. And I would say from a more practical perspective, they're not always as useful. So you'll see this in your EU taxonomy assessment. But generally, the description is more useful than the NAICS codes itself, but it is a good parameter to refer to. And ultimately, it also the economic activities are broken down into sectors, with this activity falling under the sector of energy. So as I mentioned, there are 6 environmental objectives. Each environmental objective has a certain number of activities that fall under it. And once again, what you as a company will do throughout the EU taxonomy is go through these activities based on the underlying environmental objective and see to which ones your company, with which ones it complies based on the description and the underlying technical screening criteria. So let's quickly go through this here. The first one and the most widely used one is climate change mitigation. So that has 101 activities that fall under it. Then you have climate change adaptation with 106 activities that fall under it. And then you see that the other 4 are a lot smaller, also because they were added later. So here you have sustainable use of water and marine resources with 6 activities, transition to a circular economy with 21 activities, pollution prevention and control with 6 activities, and protection and restoration of biodiversity and ecosystems with only 2 activities. So basically what we're seeing here is an overview of all of the environmental objectives. And what you as a company will do once you start the assessment, especially at the beginning when you're looking at how your company maps itself in the framing of the EU taxonomy, is to go through these 6 environmental objectives, look at the activities, and then see, okay, which ones do we need, or which ones can we see as being related to the operations of our company. And step 1 in that eligibility assessment is therefore to assess eligibility to the economic activities. And I think it's useful to share a description of the EU taxonomy assessment, mainly because that kind of boils down what the legislators are looking for in this step. So the taxonomy eligible economic activity means an economic activity that is described in the delegated act, irrespective of whether that economic activity meets any or all of the technical screening criteria laid down in those delegated acts. So here, what I think is the main point, which I've also highlighted in blue, is that it must meet the descriptions of the text in the delegated acts. Delegated acts basically referring to the 6 environmental objectives and the underlying economic activities. This means that it doesn't have anything to do with the technical screening criteria. And that's important to note for when we go deeper into the assessment, because essentially EU taxonomy is split up into 2 parts. It's split up first into assessing eligibility. So to what extent does your company comply with these 100 plus activities, to which ones can it be mapped? And once you've done that, you're going to look, okay, well, for example, I know that I have solar panels on my roof. I know that this activity is something that I comply with. So that's an eligible activity. That's step 1, and it's pretty straightforward. Step 2 is then to look at the technical screening criteria, which we're going to look at in a second. So what this means is that you need to look at all 100 plus economic activities to assess eligibility, and you purely need to look at the descriptions and to see if they align with your company activities. So that's really a straightforward exercise, but of course, kind of finding an overview of all of these activities in a way that allows you to really kind of go through it in an efficient way. It's not always easy. So what we've done at Coolset is we've made an overview of all economic activities broken down by the environmental objectives. You can download this for free. So I have here a QR code that links to the Excel file, but we also have a link that we'll share with you in the email that you'll automatically receive after the webinar. Feel free to download it. I think this will perhaps be very useful for those that are looking to kind of conceptualize the EU taxonomy and to see all the descriptions, but also the corresponding technical screening criteria, because those are also included in this Excel file. So yeah, feel free to download. And if you have any further questions after the webinar about that sheet, feel free to send me an email at jasper@coolset.com. So once basically you've found that description matches, you know that you have an eligible activity. So that's basically the first step of the exercise. And the next step is to calculate what percentage of the KPIs are coupled to that economic activity. So this is what we're going to focus on now, and this is part of the webinar, to look at how these KPIs are calculated. So the KPIs essentially are CapEx, which is capital expenditures. So this is things that, for example, when you buy big machinery or you buy a building, or you pay for things that are not part of your operational expenditures, all falls under your CapEx. That brings us to the second point, which is OpEx, or operational expenditures. Here you're looking at daily expenditures, expenditures that are recurring, but also, for example, smaller expenditures. So, for example, people that come and repair things in your building, things like that. Then the third one is KPI 3, which is turnover. That's basically all the money that you're receiving or earning. And based on either of these 3 KPIs, you can allocate them to these activities. So to kind of bring that into perspective, I have an example to share with you in a second. So when you want to calculate CapEx, OpEx, and turnover, first of all, this requires a complete export of your financial data, split up by CapEx, OpEx, and turnover. So this requires you to have a sit down with your financial team, request this export. I've already worked on EU taxonomy with a really big company in the Netherlands, and this took a bit of time, but essentially it's quite a straightforward process. You then match relevant line items to the eligible economic activities. This is essentially what it boils down to, but this will take quite some time. And basically every expense that falls under one of the economic activities is added to that eligible CapEx, OpEx, and turnover. So this might require a bit of context, but I'll provide an example in a second. And I also think it's good to note that this is one of the most time-consuming steps, as you go through all of the line items and match them to the identified eligible activities. And generally speaking, for companies that fall under CSRD, so companies that have really big financial portfolios, that means you'll probably have over 100,000 line items potentially to go through, which of course doesn't mean that you have to check everyone individually, because there might be some ledgers where you already know that, for example, salaries or rent are not part of any eligible activity, so you can directly omit them. But for example, when you're looking at more operational expenditures related to construction or purchases of cars or different types of vehicles, then you really have to go through them carefully and see, okay, which line item can we map to a specific type of eligible CapEx, OpEx, or turnover. So let's give an example. So your company has bought €100,000 worth of solar panels in 2024. This is registered under CapEx, as it's a capital expenditure. You then look at the description of electricity generation using solar voltaic technology as part of the environmental objective, climate change mitigation. So here we see that the description is as follows: construction or operation of electricity generation facilities that produce electricity using PV technology. So here we have a really simple description, and I also use this example because I think it makes it clear and tangible in the context of this webinar. But it's also good to note that some of the descriptions that are provided within the EU taxonomy and within these within these economic activities are a lot more complex. So some of them are really several paragraphs long, or require a lot of specific details in order to kind of assess compliance. But essentially, it all boils down to some minor or to some details that you have to keep in mind. So anyways, in this context, we know, okay, we spent €100,000, those solar panels on the roof, we installed them in 2024, and we're doing the EU taxonomy assessment over that year of 2024. So the conclusion is the description matches the expenditure, and you've basically highlighted those line items, and you said, well, here we see that we spent 5 times 20,000 euros based on the different projects they've done for us. What that means is now those 100,000 euros are added as eligible CapEx under climate change mitigation. And what you have to do is you have to repeat that for all of the other identified eligible activities. So what I recommend doing, if you really want to start with the EU Taxonomy, is to first map out your eligible activities. So go through this overview of the 100 plus economic activities, kind of break them down and see which ones might be relevant. Doesn't even have to be a final list yet, but you'll probably know that something like, for example, there are certain activities to which you probably will not be related, such as, just taking an example here, transport of CO2 or the underground permanent geological storage of CO2. That's another example of an economic activity. Composting of bio-waste is another example. So these are things that you might already know, well, we're definitely not doing that, so we can omit those things straight away. But then there might be things like the leasing of vehicles where you know, well, we do lease those vehicles, so we're going to include that and then map those to the eligible activities based on the relevant CapEx, OpEx, or turnover. So once you've had your eligible activities identified, you're going to start working towards alignment. And this here is part of the technical screening criteria. So after an activity is considered eligible, you go to the second step, is basically, which is to see whether it's aligned. So whether it really complies with all of the strict criteria set out by the EU Taxonomy for that economic activity. Alignment means that the activity meets the technical screening criteria, or TSC in short, for sustainability. That means it must substantially contribute to at least one of the environmental objectives while doing no significant harm to others. And you also need to have compliance with minimum safeguards, such as human rights and labor standards. So I'd like to break this down really briefly. So let's have a look at these two here. So the technical screening criteria are basically these two requirements here, with the minimum safeguards being a separate one, but often falling under the same kind of general phase of the assessment. So the substantial contribution criteria is for each activity to meet strict environmental performance metrics, such as emission limits or resource efficiency standards. And this is really specific to the activity itself. So for example, when you have an economic activity related to the purchase of electric vehicles, or then you have a substantial contribution criteria, which for example states that the vehicle has to have a certain emission standard, which is generally 0 grams of CO2 per kilometer driven. But you also have an economic activity that relates to hybrid vehicles. And there it's a bit more technical because it asks for the car to be below a certain amount of grams of CO2 per kilometer driven. And that then requires you as a company to look into, okay, which companies have we leased or which companies have we purchased, cars have we purchased, which of those are hybrid vehicles. And then you have to kind of get more technical and see, well, do these hybrid vehicles have reports published, or do the manufacturers have reports published on how many grams of CO2 they generally emit per kilometer driven? And if they're below, then we can basically greenlight the conclusion that it complies with the substantial contribution criteria for hybrid vehicles. The second one is the DNSH, or the do no significant harm. Here you have to assess every eligible economic activity in order for it to not harm any other environmental objectives. So as I mentioned, the most prevalent kind of category that companies put their activities under is climate change mitigation. A lot of the activities that fall under climate change mitigation have DNSH requirements for the other environmental objectives. And what I'm showing here on the right is a small overview published by S&P Global, and they've done a review of over 12,000 companies that have already reported on EU Taxonomy, and they are basically showing how many companies actually comply with the DNSH requirements. And you're seeing the bottom bar in light green is the bar that shows which of these DNSHs are met, which basically goes to show that the number of DNSHs that are met is very low. That's also because companies are just starting to report on EU Taxonomy. I believe it was first published in 2022 or 2021, and companies are now starting to pick up on it. And because it's so new, companies haven't implemented yet all the requirements of the EU Taxonomy. So one of those, for example, requirements is that for DNSH, for climate change adaptation, you often need to comply with what they call Appendix A, which requires you to do a climate risk assessment. And that can be quite complicated because a lot of companies haven't conducted those for certain economic activities, which means that automatically they don't comply with the DNSH. And because they don't comply with one of the elements of the technical screening criteria, the economic activity cannot be considered aligned for that reporting year. The third point to consider in order to ensure alignment is the minimum safeguards. And here it's also good to note that the minimum safeguards is assessed on company level instead of activity level, which is the case for the substantial contribution criteria and the do no significant harm. And it requires companies to have due diligence policies on their and actions on fair competition, taxation, corruption, and human rights. So it is pretty straightforward. You just have to have policies on these 4 things, but then there's also some clauses in there which state that if you have had previous cases of corruption, what have you done to mitigate that? And do you have any policies in place to mitigate that in the future, and so forth. If you want to know more about it, have a look at the final reports on minimum safeguards published by the European Commission in October of 2022. It gives pretty good breakdown of what you need to consider. Then let's have an example of how you assess alignment. So I'm going to stick with the example that we've been using previously, just so that we're on the same page. So the activity is electricity generation using solar voltaic technology. And here the substantial contribution criteria is simply the activity generates electricity using solar PV technology. It is a really simple breakdown. There's once again here also different examples that require several, that are broken down into several paragraphs. And the DNSH required for this activity span across climate change adaptation, circular economy, and biodiversity. So I'm not going to go into detail on what all of those DNSHs require. I'm only going to quickly brief you on what the DNSH on climate change adaptation means. And this one requires companies to do a climate risk assessment, looking at acute as well as chronic risks of climate change on the installation of solar panels. So one of the acute risks, for example, has to do with extreme weather events. And there you might consider, for example, if you have solar panels on your roof and you have hailstorms in the future, even if it's just once every 5 years, that's a substantial risk to the integrity of those solar panels on your roof. And you might want to report that or mitigate that with whatever means are possible. But basically, if you haven't done a climate risk assessment for this activity, so you haven't done a climate risk assessment for the installation of your solar PV, for your solar panels, then you cannot claim alignment with that section of the DNSH. So ultimately what that means is that all 3 requirements need to be satisfied. And when that's the case, the activity is eligible and aligned. Even if one of those elements is not aligned, then the whole activity is considered only eligible with different plans for the next reporting year, where then you might do a climate risk assessment, or you might look at the substantial contribution criteria in more detail and see whether there's anything you can do there. So just a summary on alignment, all 3 steps of alignment need to be checked per eligible activity. Even if a minor detail of one of the alignment criteria is not met, 0% can be aligned. So here you see it on the right, just kind of a breakdown of all 3 criteria in order to achieve EU Taxonomy alignment. So here are some takeaways from real-world applications. Alignment often requires operational changes, such as efficiency upgrades or sustainable supply chain adjustments. Why do you need to look at your supply chain? Because some supply chain or some suppliers might already have integrated some of the requirements of the EU Taxonomy into their structure. For example, if you have a company working on repairing things in your building or installing certain, for example, toilets are one of the interesting parts of EU Taxonomy, because they also mention that if you install toilets that use below a certain amount of water per flush, for example, then they can be considered an aligned investment. So you might then also want to consider, well, if I need to install new toilets in the whole building, I might as well look at the EU Taxonomy and say, okay, well, I'm not sure what the number is, but let's say it's 5 liters per flush. If it's below that number, then I can consider that an aligned investment, or at least an eligible investment. So that's something to keep in the back of your mind. I do also see that Appendix A, which is part of DNSH climate change adaptation, requires climate risk assessments and is mandatory for nearly every activity. And this is a really big bottleneck to alignment. So look at if you can do climate risk assessments in a standardized way. I know some companies have done basically these assessments for the whole company and not just one activity. And the scope of the EU Taxonomy under CSRD is often underestimated, as the EU Taxonomy takes at least 2 months to complete for first-time reporters. Practical next step, I would say map your activities. So list your company's key operations and check if they fall under the EU Taxonomy. Use available tools, so leverage our EU Taxonomy database, look at the NACE codes and reporting templates to simplify that process, and set a timeline. So break the process into manageable steps with clear deadlines to stay on track. As Laurens mentioned, the EU Taxonomy is part of CSRD and you will need to report on it. That said, we are looking also at how the Omnibus is going to streamline reporting on EU Taxonomy together with CSRD. And here's a quick overview that I think might be useful for you as well. These are some documents that you should refer to if you want to do more reading, but also want to get more of a deeper understanding. So first of all, the EU Taxonomy Compass, it's an EU website which has an overview of all the economic activities together with their technical screening criteria. Then you have the Commission Delegated Regulation 2021 and 2178, which is the official EU Taxonomy regulation as published by the European Commission. You have the EU Taxonomy User Guide, which is a simplified EU doc, and it's just a clear breakdown of steps. You have the final report on the minimum safeguards, which I briefly discussed. And then you have our EU Taxonomy Excel sheet, which you can download via the link that we'll share after the webinar. And just to summarize everything I've discussed, overview of all the steps, you need to first assess eligibility by reviewing the descriptions of the 100 plus economic activities. Then you need to map CapEx, OpEx, and turnover to the eligible activities. Step 3 is assessing the technical screening criteria. And step 4 is summarizing everything into a report based on certain templates that you can also find in the official EU report. But also, if you want to know more about the templates and how to set up a report, feel free to reach out, and I'll share some examples there as well. And with that said, I hand it over to Laurens to talk a bit about how we approach EU Taxonomy at Coolset, and then we'll go to the Q&A.
Thank you. Thank you, Jasper. Solution on how to tackle the EU Taxonomy within the platform Coolset. So at Coolset, we have one place to measure, manage, and improve on your sustainability. This is what we call the Sustainability Management Platform. As you can see, consisting of our carbon management software to measure and analyze and report on your scope 1, 2, and 3 emissions, and our compliance management software consisting of our CSRD module and our new EU Taxonomy module. So let's dive into the EU Taxonomy framework. With Coolset's compliance management software, we provide compliant EU Taxonomy software that will guide you through the whole reporting process, from identifying relevant economic activities to fill in the mandatory EU Taxonomy reporting table, all in one platform. As you can see, you can map your business activities and access taxonomy eligibility within the platform. In the platform, you will be able to map your business activities with the help of the information supported by Coolset on the right side of your screen, as you can see in the overview of your screen. After mapping your business activities, of course, as Jasper said, you have to assess taxonomy alignment. In the platform, you can determine whether they meet the substantial contribution criteria, do not significant harm requirements, and minimum safeguards. As you can see on your screen, we do have an assistant on the right side of the data point that will always help you and give you more guidance on how to report on the EU Taxonomy. After the alignment, of course, you need to calculate and report your eligible CapEx, OpEx, and turnover. You can also do that in the platform, and we'll also give you guidance with supporting information to guide you through the whole framework. And then why software, why Coolset? Within the module, you can easily manage the process to report on EU Taxonomy. As you can see on the right side of the screen, you can assign tasks to specific colleagues. You can either be the assignee, the reviewer, or the auditor. We do provide unlimited users for organizations, so you can conduct your management from the platform. You can easily work together with a big team to either comply with CSRD and or EU Taxonomy. Next to that, you can add supporting documentation. This is important to substantiate an answer to a specific data point. Many editors want to see this with an argument. Yeah, so the benefits, of course, you will be able to track your progress on all frameworks, CSRD and EU Taxonomy, with one platform. So the benefits for an all-in-one solution is, of course, CSRD and EU Taxonomy in one platform. Maintain data consistency across all frameworks. And of course, you will save time with smart autofilling and suggested answers. Yeah. So that's about it for the Coolset platform. If you want to take a closer look at it, if you want to have a deep dive for other features, you can reach out to me or to Jasper. Our email addresses are down below. We will send you the slides afterwards. So yeah, I think it's time to go to the questions.
Yeah, thanks, Laurens. So I see some comments in the chat as well as questions. I think one interesting comment posted by Nico, which I've also seen this morning, is that today the EU Platform for Sustainable Finance published the report on simplifying the EU Taxonomy. And yeah, I had a brief look at it this morning. I had to prepare some final things for the webinar, but it's more than 100 pages. So what we're going to do at Coolset is we're going to have a discussion with the team, do a proper deep dive to see what takeaways we can learn from that, and then we'll be sure to also share that on LinkedIn. So yeah, you see as well, you know, as we're hosting a webinar, the EU is already posting more updates. So it's a really volatile time, but we're always trying to stay one step ahead. So thanks for that, Nico. Yeah, let me just go to the questions. So one question by Tate, I can start a live answer. So are there any benefits to companies for greater alignment with the taxonomy? I.e., could some of the investment into an activity, like your example of less water usage toilets, be offset through financial incentives? Good question. That really depends on the type of activity. Basically, you know, you might in this case also see a benefit directly of using less water, which uses less money. I doubt that, you know, the ROI of that will lead to, you know, a profitable investment. But generally speaking, the European Union has also used the EU Taxonomy as a lever for sustainable financing, and then also for arguing that companies that work with EU Taxonomy are more likely to gain access to capital. So that's one of the kind of more major arguments of EU Taxonomy being used in the EU. But of course, I do think that the argument that, you know, sustainability leads to process efficiency, which then again leads to less costs for those resources or materials, is often underestimated. And I do think that the EU Taxonomy does incentivize companies to more efficient with their resource use. Hope that answers your question. Let's see, question from Nazim. What if only a subset of the eligible activity is aligned and the remaining part isn't, how to report it? So that's a good question. Basically, what then happens is that unfortunately, the whole activity becomes not aligned. It becomes eligible, however. And what I would recommend here is that the EU Taxonomy doesn't set out a one way to write a report, but I would mention for every economic activity that you have identified to what extent it is aligned, but also to what extent you require improvements in the next reporting years, so that you can then work on that together with your team. And then, for example, if you've identified that one of the climate risk assessments wasn't done for that activity, you might say, well, for next year, we're going to do it so that we can achieve alignment for this activity. Let's see, a bit of a longer question from Alessia. Sorry, I have a doubt in relation to example 2. Doesn't economic activity mean the characteristic activity of the company? If the NACE code is not related to energy production through solar panels, should the purchase of the panels still be reported? So if I understand the question correctly, basically what you have to do with the eligibility assessment is to just look at the description as the overarching guideline, and the NACE code is not leading in this sense. So they've also mentioned in their reporting that the NACE code is not the leading source to use, because sometimes you might also have things that are relevant for that description that don't fit with any of the described NACE codes. So I would say look at the description first, use the NACE codes as a general guidance, and then kind of see where that takes you. But yeah, I hope that answers your question. Otherwise, if you do have kind of a scenario in the future where you're not sure, feel free to reach out and we can have a look together. Question from Guus. I'm looking through the full list of sustainable economic activities, but I don't get why some are on the list, like leasing an aircraft or air transport. How is that a sustainable economic activity? Very good question. So the EU Taxonomy, when it was published, was pretty heavily scrutinized by environmental agencies because they said that the EU was basically greenwashing or allowing non-sustainable sectors or enterprises to be part of sustainable funding. For example, gas is also on the EU Taxonomy, gas purchases under certain conditions. What they do try to do, however, is that for alignment on these activities, you do need to comply with very strict criteria. And I can imagine, I'm not sure about these specific examples, but I can imagine it has to do with probably the purchase of sustainable aviation fuels or the use of the most efficient, airplane technologies or something like that. So what they do try to do is incentivize the sustainable use of non-sustainable sources. And that's the same for natural gas. They said, yeah, well, we need to kind of get away from coal. We need to get away from different types of non-sustainable fossil fuels, and gas is the most sustainable one. I personally don't agree with that argument. Yes, we need gas as a temporary measure, but I don't think we should mention it as a sustainable investment. Question from Nazim. For large firms, is it allowed to apply financial materiality thresholds to reduce the number of activities to be reported? Otherwise, the activities to be reported would be too extensive. Good question. I'm not 100% sure, to be honest. I don't think you can. So basically, the EU Taxonomy has no direct relation to financial materiality, at least not in the sense that it's part of the CSRD. But of course, there is a certain nuance there. So there are some activities, that only contribute to 0.01% of your total capex or opex, and there you might argue, well, it's not relevant for us. What I've seen in the many reports that I've read is that companies do generally report even on the smaller activities, just because it does give them some kind of substance in their reporting. Because I do also see that a lot of companies, find that they have very little eligibility and zero alignment, so that they want to use everything they can get. But short answer is I'm not sure on this one. I do think, though, that it's good to kind of keep everything in mind. And of course, it is extensive, but you're already going to reduce, I think, or omit 70% of your financial data off the get-go, purely because you're only going to look at certain ledgers and subsets of that financial data that you already know are relevant to that category of the economic activity.
A new one above.
Oh,
on top.
I have a new one on top. Question from George. Is taxonomy mandatory under CSRD? I thought it was only if you were looking to claim sustainable finance rather than de facto for all activities. It is mandatory under the EU taxonomy, under CSRD. So ESRS 1.1 asks companies to look at, to mention their sustainable capex and opex, which has directly to do with the EU taxonomy. So they are heavily interlinked, which is also, I think, why the EU is looking at streamlining this, which I think makes sense, by the way. I don't think the Omnibus is bad. I think it's really good to kind of make some things more efficient and productive, to also reduce the burden on reporting companies. But I think this is also something that we might see change. But for now, it is mandatory under CSRD and then ESRS E1. Great. I see one question from Robert. Maybe Lawrence can answer that one.
Yeah. So is the taxonomy module already live under the CSRD tab in Coolset? So this is an answer and a question for clients of Coolset. The taxonomy module will be an add-on in the platform. So you can, I will reach out to you, Robert, to talk about the module, or you can reach out to Rutger, the success manager.
Thanks, Lawrence. I really like that these webinars are generally, also attended by people that are willing to share their knowledge as well. To the question of whether there's a materiality threshold for the eligibility assessment, Anna has just shared in the comments her perspective or her view that the Omnibus, or at least the new EU taxonomy, report that was published this morning does mention that the materiality principle will be applied to certain KPIs. So I do have to get into the details of this myself, but does look like there will be some kind of threshold introduced under the Omnibus. Thanks a lot, Anna, for this quick and timely update. I think many of us will be sure to also give this document a proper deep dive. Let me just quickly look through the comments to see if there's any last bits to refer to. I think that was it. With that said, thanks everyone for attending today once again. Thanks for your questions and your time. I hope you found this useful. For any further questions, you know where to find us, laurens@coolset.com and jasper@coolset.com. You can also refer to our website for more webinars that we've hosted in the past on the CSRD. And once again, we'll share with you an email after this webinar with a link as well to the document for all of the economic activities. Thanks, everyone, and have a very nice day.
Thank you, everyone. Bye-bye.